Hello everyone, welcome to a breakdown on EU. In this video, I'll break down a trade that I took on Friday. In fact, it was the only trade that I took in this entire week. And honestly, that's completely fine by me because I know that I'm very selective with my trades and my focus is always on quality rather than quantity. And I know that if no trade opportunities presented themselves earlier in the week, then there's no point in me forcing setups or forcing trade ideas that don't align with my strategy or with my trading plan, right? And I know that the objective is to stick to my plan, monitor price, and only execute when the market presents a valid opportunity. And if it doesn't present any opportunity and I don't take any trades the entire week and I stick to that plan, that's still a win for me because I know that I followed my plan, right? And I know that not trading on a particular day on a particular week is also trading to me because that means that I followed my plan and that plan told me that you shouldn't be taking a trade, right? But if instead you or I, right, you or maybe I forced a setup because I feared that I'm missing out on something, then that's a mistake that I made and I didn't follow my plan correctly. And that's exactly what real and stable trading looks like, right? You're going to have winning weeks, you're going to have losing weeks, and you're going to even have weeks where you don't take any trades at all, right? And you need to be mentally prepared for all of those scenarios. And what actually matters is how you respond to those scenarios, how you manage yourself, and whether you stay aligned with your trading plan or not, right? So, this was the only trade that I took this week. I took that on Friday. And just like I said earlier, I'm totally fine with that. I also provided you with the signal for this particular trade in the group. And now let me break it down for you. It was an interesting setup and there's a lot to learn from it. First of all, let's go over the weekly time frame and let me walk you through the price action for the entire week. And that way you'll see exactly what happened and how you could have navigated through the price action of this week properly and accurately. So on the weekly chart, what you can see is that first of all, we had taken out this swing high. This was also the monthly fair value gap and a clear external range liquidity or ERL on this particular time frame. Now, obviously, we know that price isn't going to continue or price isn't going to keep pushing higher straight away from here, but instead it first needs to retrace and fill internal range liquidity or IRL before it does anything further. And that's exactly what I expected price to do this week. At the start of the week, what happened is that we took out this weekly candle high, which turned into a weekly candle range for me, right? And once that candle range high was taken, the next logical move was for price to retrace lower and fill the IRL and take out this weekly candle range low, right? That was the next logical move for price. And that weekly candle range low became my drawn liquidity for this particular week, right? So my drawn liquidity was this internal range liquidity and this weekly candle range low for this particular week. Now, let's refine this buys down to the daily time frame and let's see what we've got there. On the daily time frame, you can see we have the same narrative in market context. Price had taken out this previous high, right? Which means that liquidity was swept, right? Now, the next step for price is to now fill internal liquidity in the form of filling this FVG right here. So now the refined drawn liquidity on this daily time frame for us is this FVG, this daily FVG sitting right here below, right? That's the narrative that I had on the daily time frame for this particular week. Now let's drop down to the 4-hour time frame and let me break down this entire price action for the week and let me tell you exactly what happened and how you could have navigated through this price action. Now, looking at the 4-hour time frame, what you'll notice here is that earlier in the week, on Monday, I initially expected price to drop away from this level right here, and I was looking for shorts here. And the reason I was looking for shorts is because we had an SMT divergence with GU, right? GU had taken out this high early in the week, but EU had failed to do so on Monday, and because of that I expected price to drop straight away, but instead what happened is that price pushed higher and moved higher and eventually took out this high. Now here's what's important. Even though my initial directional expectation on Monday was wrong, I still stayed risk off and did not take any loss on Monday. And you know why? Because I was waiting for a confirmational order block entry here. And since price was clearly pushing higher, it never gave that confirmational entry, and that literally saved me from taking a loss here. Right? So even though my initial directional expectation was wrong, I still did not take any loss because of the confirmational aspect of order block entries. And this is why I always emphasize on the confirmational aspect of entries, right? So on Monday, I didn't take any trade and I stayed risk off and followed my plan. Then on Tuesday, price opened up right here and I expected it to take out this high before reversing lower. And you can see that's exactly what price did. Now here I was initially expecting price to first of all take out this candle range high at 6 a.m. Because I was expecting a 6 a.m. London lunch reversal from here, but instead price did not took out this candle range high, and instead it reversed slightly earlier without the purge, right? And that way we ended up missing the trade. But you can see that the directional bias was spot on. We correctly anticipated the reversal, even if we didn't catch the entry, right? Now, even then, I didn't feel any FOMO, right? The setup did not align with my exact timing and confirmation, and that way I missed it, and that's completely fine because I know that following the plan is always the priority. Then on Wednesday, what happened is that we expanded lower, and along with that, we also had an SMT divergence here, right? We also had an SMT divergence between EU and and GU took out this high, this corresponding high on its time frame, on its chart, whereas EU failed to do so, and that gave us non-symmetry, right? And this non-symmetry reinforced our bearish bias and confirmed that now we can potentially reverse lower towards the long-term drawn liquidity, right? Along with that, price also formed this fair value gap on Wednesday after taking out this external range liquidity. And because we took out this external range liquidity, I expected it to fill that internal range liquidity first and then continue lower. But you can see that price stayed below and never filled the gap on Wednesday. So again, on Wednesday, I stayed risk off and did not took any trade. Then on Thursday, I had the same expectation. I was looking for a bearish continuation trade towards the long-term drawn liquidity lower. And during London Open on Thursday, I outlined a potential move where price would fill this fair value gap, fill this internal range liquidity, and then drop from there. But again, price formed an SMT divergence with DXY, right? Let me show. What happened on DXY is that it filled the corresponding FVG right here while EU failed to do so, right? And I updated you on this divergence in real time and told you that this divergence might prevent price from filling this FVG and price might drop down without filling this internal range equity, and that's exactly what happened. Because of this SMT divergence, we had non-symmetry and price dropped down immediately without giving us an entry here, right? I was looking for short entries here, and because of that divergence, I missed the entry. Now, throughout all of this, my drawn liquidity remained lower, which is the daily internal range liquidity. So I was expecting bearish price action all week, right? And that bias never changed. Then on Friday, the drawn liquidity still hadn't been met, right? And I continued expecting bearish movement on Friday. My expectation was for price to fill this internal range liquidity, right? Initial expectation was for price to fill this internal range liquidity and then look for a bearish lower time frame order block confirmation entry from here, right? And during NY session, what happened is that price purged above this high, right? Price purged above this high, but it failed to push higher towards this internal range equity or this FVG, right? And again, we had an SMT divergence with DXY. What happened is that we had, first of all, we had two SMT divergences. The first one is a key level SMT divergence where EU failed to test this FEG, but DXY filled this corresponding FEG and tested this FEG. And another divergence is right here. Price failed to take out this low on DXY, but EU did indeed took out this corresponding high on EU. And because of these divergences, price confirmed to me that price might not be able to fill this internal range equity and it might drop down without filling it, right? And because of that, I changed my initial bias of expecting this FVG, and instead I immediately started looking for bearish entry because this double divergence combined with my bearish drawn liquidity, right? And this FVG right here acting as a key level, right? All of these factors were enough for me to shift my context and start looking for a bearish trade right away actively. And finally, after being right about the market direction the entire week but not getting a setup, Friday gave me an entry here on the lower time frame and I executed it. Now you can see that I could have potentially had winning trades on Tuesday, Wednesday and Thursday because I was right about the market direction, but you know that price didn't offer the purges or the necessary confirmations or the necessary timings for it. And because of that, I did not took any trade, right? Because I'm not here to force trades. I'm here to follow my system and only trade when a valid opportunity presents itself. So I'm totally fine with only one trade for the week, and it was a successful one. Now let's drop down to the 15-minute time frame and let me break down the actual 15-minute entry that I took. Now, as I said earlier, on Friday, I was waiting for a purge above this Asian range high and these highs, right? And what happened during the New York Open session is that we got that purge. And along with that, we also had an SMT divergence with DXY. What you can see right here is that DXY failed to take out this low, whereas on EU, we took out this corresponding high, which means that we had non-symmetry and we had a strong divergence. And you can see that if we go above to the 4-hour time frame, we've got this FAG as well, right? So you can see this divergence occurred inside a key level after we had a purge. And once we had this divergence and we tested this key level and we got the purge, I started looking for a bearish order block confirmation entry right around here. Now let me show you how I got that entry. So what happened here is that price had this bearish down close candle, and with this particular candle it closed below these two candles. Now if you remember the definition of an order block, then you'd know that an order block is either a single candle or a consecutive group of candles which either purges liquidity or fills liquidity, and then it gets engulfed in the form of price either closing above it or below it. And in this case, you can see these three consecutive candles, this and this right here, these three consecutive candles together led to this purge of this high. So now my expectation for price would be to close above either one of this candle or these two candles or these three consecutive candles as a whole. And in this case, you can see price closed below first of all these two candles. And because these two candles got engulfed, this became my order block. If price had closed below all these three consecutive candles, then that would have been my order block, right? From here, your next order block would have been this particular candle. And here, your order block would have been this candle because these two got engulfed. If price had just closed below this candle, right? If it had closed somewhere out around here, then your order block, your initial order block would have been this particular candle. But since price closed below these two candles, your order block became these two candles. And once this candle also got closed below these three consecutive candles, your next order block would have been this candle. And since initially I was monitoring price action, it closed right here, I took my entry right here, and price then tested that order block, and then it expanded lower and eventually reached the targets. And this is how you properly select an order block, right? You need to remember the two protocols that makes a candle a valid order block, right? The first one is that it either purges or fills liquidity, and the second protocol is that it gets engulfed, right? And you and an order block isn't just a single candle, right? It's not just a one single candle, it could be a consecutive group of candles as well. And then you choose the candles or the candle that gets engulfed, and in this case initially these two candles got engulfed, so that became our valid order block. If you had missed that, then you would have waited for price to show you more hints, and maybe you would have seen this candle got engulfed too, and in that case this would have became your next order block. And you can see price tested that, and it dropped lower.